Andrew Takyi-Appiah, thank you very much for joining me in this conversation, and it's good to see you again. Actually, I am very excited about the work you're doing, Andrew, because you are an entrepreneur putting in place a payment infrastructure on an existing ecosystem that is probably not very well understood outside of Africa. And when people outside of Africa think about payments in Africa, we only think, M-Pesa and the various banking payment networks. This is going to be an interesting and long conversation, partially to help people outside of Africa to understand Zeepay and the landscape in which you operate, but also to explore some of the business decisions that you've been able to make you're making in order to grow your business and to work closer with the banks, work closer with the telcos, and so on. So as a start, give us a sense of Zeepay.
Okay, so thank you very much. I actually like a comment you made, which is the fact that we're trying to build onto an existing ecosystem. Okay, so that's exactly what we came into market to do. Zeepay is an inclusive platform and are designed in such a way that we'll be able to bring all the different parts of the ecosystem together into one single platform to transact. What we do as a fintech originally is to enable remittances to be paid into mobile wallets across all wallets in Ghana, going through our standard, which is our Zeepay wallets. What we also do is to aggregate the bulk payments. So we make it possible for government, aid agencies, etc., to be able to reach everybody in the country where they need to make payments to them. Then we also make it possible for peer-to-peer payments across multi-network. Now, let me also talk about the African ecosystem slightly in a different twist, which will give you a better understanding of the ecosystem in Ghana. Globally, everybody runs on just one thing. It's a card rail. You either pay on Visa, pay on MasterCard, or in recent Union Pay. The African ecosystem is a lot more robust in that we have omni-channel rails. We have, when it comes to wallets, we have about maybe 80 wallet providers on the continent. Zeepay, MTN, Orange Money, Move, Africash, Airtel Money, Airtel Tigo, and Tigo. Do you see what I mean? So we have multiplayer market, and these wallets are instruments. So now in our environment, we have legislated instruments that are acceptable for payments. It's wallets, cards, check, and cash. So these are the only 4 instruments that the law recognizes to be used for payments. Of these instruments, we built our rails. So today, our rails are not just card rails, but there are all these 4 rails plus a bank account. So all of a sudden, when you're on a platform like Zeepay, you have access to wallets across 23 markets in Africa. You have access to over 20 million bank cards on the continent using Visa Direct. You have access to bank accounts, either through the Visa Direct angle or switch by switch across markets. Now, this is what really a payment ecosystem should be like. And that's the robustness of our ecosystem. It's just rather unfortunate that a lot of the time, everybody just talks about the card rails and M-Pesa. The African payments ecosystem is estimated to be $181 billion. Add remittance, which is about $70 billion. So it's a very big ecosystem. And the key players on that ecosystem is the likes of Ghana, the likes of Kenya, of course, the likes of Uganda. Ivory Coast is picking up significantly. Ivory Coast is starting to look quite exciting. Mozambique is beginning to look exciting as well. So these are the key market players on the ecosystem.
Let me tell you what the ecosystem looks like from outside of Africa, right? The first thing that is very interesting is the number of wallets that already are in Africa.
Africa has about 250 million wallets, and Africa's wallets constitute 90% of the global wallets.
I'm very curious to drill down on what we mean by wallets. I'm sure that each of the wallets want to dominate their own little ecosystem. It may be loyalty, it may be spending, it may be retail, locked into specific relationships, and so on. And the fact that there are still players who think that they can play the wallet game. Okay. The second dimension is the fact that regulators like in Ghana have been imposing interoperability from the beginning. So you actually operate in an environment where there is incredible interoperability. And when there is interoperability, am I right to imagine that Zeepay sits on top of the wallets? Okay. The values that you provide, are they on top of what the wallets do?
Okay, so Zeepay actually the only licensed wallet at the moment in Ghana. We're a full wallet with a full complement service, and we sit on interoperability. It's interesting, actually. We're the only platform that has both the back end and the front end of interoperability. So with us on the back end, we can move money to all networks, all wallets, all bank accounts, etc. But on the front end, our consumers can do the same as well. Because you see, we have one simple belief. Financial inclusion will only be attained through an inclusive approach.
Yes.
So let's first be inclusive and give the consumer a choice.
Okay.
Let's bring efficiency to the ecosystem, and the consumer will stay with us.
Okay. Now, can you place wallets in terms of where it operates from something like M-Pesa, for example? M-Pesa operates on a device, and it's not necessarily a wallet. There's another dimension that people outside of Africa would find very interesting, which is the role of the telco players. It seems to be that in Africa, the telcos are successful. They are players in the payments space. They have successfully monetized the relationships they have. There are many countries around the world where telcos try to get into payments and never get off the ground.
When we talk about wallets in our part of the EMI wallets, it's basically a digital wallet attached to your phone number, which allows you to do cash-in. Cash-in means receive money into your wallet. Allows you to do cash out, which means take money out of your wallet. Allows you to do a peer-to-peer transfer, which is to move money from one point to another point, and then allows you to receive your remittance in your wallet. Okay, so these are sort of the basic. Then on the back of the basic will be airtime. So you can purchase airtime. You can actually send people airtime, right? Then you can start to do other things like microinsurance, lending, buy loans, etc. So that's a full complement of a wallet. M-Pesa does the same thing. Zeepay does the same thing. In the banking ecosystem, what we have in the ecosystem from a retail perspective is your traditional retail bank. Then in your traditional retail bank, you have the HNIs or wealth management. Then after HNI, you have your mid-segment, which is usually premium, premier. Then after that, you have your mass market. So after the mass market business, which failed considerably, especially on the African continent, because the African banks could just not reach the critical mass. They could only reach up to the middle premium. So you find that every bank, every customer will be multi-banked by 5 banks, commonplace, which is wrong. So then we had financial inclusion, which we could not integrate into banking. So in there, we ended up with mobile financial services, which is basically what we providers of wallets do. So we, the providers of wallets, become that critical mass platform that is enabling the very bottom of base to have access to banking systems, right, or have access to financial instruments, which in this case will be a wallet. It's called mobile financial services. On the other side of the world, they fail at it. Sometimes I think it's 3 reasons. The first reason I think is maybe they do not have a strong critical mass that have a need because the card business is strong. Some markets are card markets. If you go to Latin America, these are strong card markets. If you go to United States of America, these are strong card markets. That's why you find prepaid cards being sold on the streets. If you come to our part of the world, because we're not card people and we're mobile people, your average African has a mobile phone. It's easier for this to grow faster. Right. So on the continent, when it comes to mobile financial services, we have Zeepay, which is the only independent, non-telco-led MFS. Then you have Airtel Money, which is obviously telco-led. You have Tigo Cash, which is telco-led. You have MTN Mobile Money, which is telco-led. You have Vodafone Cash, which is telco-led, and more. What makes us powerful is that with our platform, all you need is an active phone number. You don't need a SIM card to be onboarded. So all of a sudden, every telco's customer is my customer. So I'm able to onboard more wallets than they would all ever be able to onboard, which is probably what the future of mobile financial services looks like.
Now, what you've just described is incredibly amazing and incredibly sensitive because it's not necessarily a formula that can work in every country.
Yes.
The countries which are well banked does not need this layer. And yet in Africa, you have the telcos which perfected the wallet model, dominating, especially countries which are in the lower end of the per capita GDP, and then having different rates of success when they move into countries with a higher level of GDP. So something that might work in a Kenya may not work in a Ghana, may not work in a South Africa. You're actually talking about a very incremental difference in the space that you're in. So Zeepay, what's your critical success factor? Is it number of functionality? Is it interoperability? Given the fact that you actually serve microfinance, the small ticket value customers.
What we did is we identified the gap in the market, right? Now, the gap in the market at the time was a bridge between the diaspora and the locals and the distance. So before we came into disrupt bank, your average remittance receiver would have to travel 50 to 100 miles to be able to pick up their cash in the hinterland. And more money went to the hinterland than it came into the cities and the urban areas. So what we said was that we're going to build a bridge between diasporans and these guys on the local end by making it possible for them to be able to receive their money and collect it from the agent network. And then we build an interoperable platform that is able to cross every single network without being on board. So what makes it powerful then is that your average MoneyGram customer can send money straight into a Zeepay wallet. The MoneyGram receiver will then walk into any agent's network, whether it's Airtel, Zeepay, Vodafone, MTN, and withdraw their money. So all of a sudden, you're layer on the layer on the layer above the ecosystem. And therefore, you built an invisible bridge using some form of artificial intelligence to be able to reach everybody. So that's really the edge we have. In terms of functionality, we're also a single source. So on our network, you can buy airtime for everybody else. So it just makes sense to be on our network and be able to do everything than to be only on MTN and only have to buy MTN only airtime if you're on that.
Is that a function of marketing or is that a function of technology?
It's a function of both market intel and market penetration, which is all one, and then also technology. I don't think it's a function of robustness of technology. It's a function of agility in your technology. The more agile technology is, the better it is. You see, a lot of time people think that single loops are the answers, but no, single loop is only monopoly. When you have an open platform, you're more likely to sustain the game, which is what we've done, basically. So we're just an open platform that allows everybody to come on board.
Okay.
So you give the consumer a lot more choice.
Everyone would come on board if it's free. What's the revenue model for what you do? Because the moment you start charging a fee, you need to pay a cost. Each customer that comes on board is a cost to you. So how do you amortize your cost?
First of all, I've seen networks charge free and not seen any uptake. All they've seen is volume. But you're working with the bottom of base. That's where the money is. And the money is at the bottom of the barrel. But at the same time, that is where it's perceived to be the most difficult. We don't offer the service for free. We actually charge 0.5% to be able to transact on our network. We're 0.5 cheaper than everybody. We also charge for termination. So every time the MTOs terminate onto our platform, they pay us for that. Okay, then we also make settlement margins. So in essence, we've got a mixture of revenue, airtime, loans, etc., etc. And that's really the model you want to run. What you now want to do is once you've got the model, you grow the critical mass. Today we have about 2 million users and we're growing. I mean, this year alone, year to date, we've done about $401 million. Okay, right. Which represents about 11% of total remittance to Ghana alone. We do 23 markets in Africa. Out of the 23, we have 9 very strong active markets. Ivory Coast is our second active market, shot up significantly, looking very exciting about the last 8 weeks.
One thing I noticed about remittance and payments in Africa is how they discover, I call them invisible rivers, from Ghana to Tanzania, yes. and so on, that nobody would have imagined existed in the past. So I'm actually curious, like when you say it's Pan-African, how did you choose your markets? What's common about these markets? Are they the more developed ones where the regulation maybe is a lot more developed? And is FX a source of income as well?
FX would always be a source of income. We call them settlement gains because we're a wholesaler. We don't do price discovery, but we settle in wholesale, so we make margins on wholesale. Just to sort of take it 2 steps back for your question, you cannot almost get it right. There's not a science per se to choose the market, but definitely one of the things that make us move is where remittance is going. So we follow the money. According to DSMA, remittance is the fastest way to grow mobile money. As we follow the money, sometimes we get it right, sometimes we gotta wait. Then the last thing you do is regulations, because the regulations in Africa are not homogeneous. What Ghana will be flexible about, Nigeria will not be flexible at all. So what you do is you first focus on where remittance, on where there's a mobile money uptake. Then you also focus on where there's a lot more diasporans outside. When you've got this model right, then you open up the ecosystem. When you open up the ecosystem, sometimes you will win, sometimes you will not. I'll give you a perfect example. We opened Uganda before Zimbabwe. We thought Uganda would be the next bright market for us at the time we're opening Uganda 2 years ago. We didn't see the uptake the way we wanted to see it. We're expecting to do about 40 to 100,000 transactions a month. Uganda, we're only doing about 30 to 40,000 transactions. Then we immediately opened Zimbabwe. And gosh, blimey, Zimbabwe crashed overnight. Then we did Ivory Coast. Then we went into Mozambique. We went into Mozambique because there's a lot of Southern Africans who move out of Mozambique into the southern part of Africa to work.
Right.
A lot of Mozambicans in Portugal, even in the United Kingdom. There are a lot of Mozambicans in South Africa. Then we also uncovered that the Mozambican youth tend to be a lot more upwardly mobile, using mobile money, etc. And they tend to be the bulk of the population. So we did that as well. And guess what? It's been a success. It's light up overnight. So it's really a very subjective conversation. But sometimes you get it right, sometimes you don't. But what matters is that you have active business, then you grow the ecosystem. Coming
back to your income source, which of the income source is the most important to you? Are you a deposit-taking institution? So that in itself would be an income source for you. And the loan business, for example, and its potential for being an important source of income.
So the top line income for us is commissions and fees. The second top line is settlement. Then the last would be all other income, which includes funded income. Now back to the lending model. Obviously, lending in our part of the world is by algorithm. So who does the most receipts, who does the most transactions, etc. A few other things go into the algorithm. But we have a slightly unique approach to doing this. And the approach we use is that you don't want to just lend to anybody. You want to be able to lend and collect back. So the best approach is partnerships. So we have a partnership with a few sort of authorized players that we can work with to do that. Then you ask, are we deposit taking? We're deposit taking to the extent that we have an instrument. It's a consumer who decides how he wants to retain that instrument.
I'm actually trying to place you exactly in that dimension. You're not a neobank in the European sense, and you're not a microfinance outlet in the Asian sense. And when you say that you use an algorithm, how close is that to maybe the peer-to-peer lenders in China who have had relationships with supply chain networks, for example, and they actually use data such as who you have in your mobile phone as friends? Is the credit scoring model something that you've been able to play around with?
The credit scoring model, there are many types of algorithms around the place. For us today, it's largely around the remitter, the receiver, and how often they receive and which networks they receive and their behaviors. But I think it goes beyond that. And I think that the Chinese model is a very good one. It's one of the ones that ultimately we would want to adopt. And what I've come to realize is about finding the right partnership. Because when you find the right partnership, you can build the right food chain or value chain and be able to leverage it.
How much of a co-founder were you with Zeepay? Did you start Zeepay yourself, or were you investing into into an existing platform? Just that relationship part of it. What's your role in Zeepay?
Well, I'm actually the majority shareholder. I'm also the managing director. And I founded 6-7 years ago.
It's not a model that you would have carried through a banking system, right, at that point. And bankers were not interested in micro payments and small value payments at that point.
Well, that's a problem with bankers in our part of the world. A lot of time we don't see it. There's a high sense of obligation, thinking that everything with the tag financial services belongs to banks. But let me tell you the most scary thing. We all thought that retail banking would die maybe 20 years down the lane. But in COVID, I can tell you for free, this is nothing. This is for nothing. That retail banking will not survive in 2021. And all banks will have to chase their model in our parts of the world, especially Ghana, Nigeria, Uganda. Kenya is gone. Let me tell you why I'm saying this. Today, we do micropayments, we do remittances, we do nano loans, we do peer-to-peer transfers, we do SME payments, we do microinsurance, we even do some form of pensions. That is all retail banking, and we do it at a lower cost overhead. I have a total of about 32 staff across the world, close to 2.5 million consumers. My gross profit margin is consistently 86% year on year, even in the dark days. The simple reason is that we have a lower and cheaper cost outlay or overlay compared to the banks, compared to all the robust platforms that they put together, which never work. By the time they finish building all these demilitarized zones, they're so light, they're so heavy, they're not able to do much. Whereas I can come into market and outsource my security to CrowdStrike, which is what I do. And when I finish outsourcing my security to CrowdStrike, I have peace of mind. Then I can focus on innovation. And then I can host my services in cloud with DigitalOcean, which is one of the best platforms you can find. Very agile. I'm just saying that the cost efficiency is so high. My cost margin to serve a single customer, it's just about 10 cents.
Give us a sense of the technology investments that you do.
Okay.
How much of the functionality is done in-house and how fast it is it? And therefore, who is your competitor? Because the barriers for entry will therefore be quite low.
Okay, well, just so you know, the barriers to entry is very high. Regulatory capital alone is about $5 million. What makes you successful as a fintech is if you build a back end with the right framework. You see, if you build a framework that is like a proper rail, a switch, then you're agile, so you're able to pile onto it easier. But if you build a very rigid, single-handed, single-line framework, then what it is that you have to patch or rebuild again. So what we did from day one is learn the mistakes of everybody. We just built a multi-framework, multi-layer backend, which allows us to plug onto the rail easier. Then we built a simple front end to be able to carry it. Today, we're on WhatsApp. We run payments via WhatsApp. We're looking to become the biggest player on that side.
Is that WhatsApp's platform or is it you using WhatsApp's platform?
We're using WhatsApp's rail to call up transactions, which is really what it is. It's a lookup feature. Look, USSD, WhatsApp, apps, these are all lookup features. You're using it to call up transactions. NFC is a lookup feature. QR code is a lookup feature. It's just you see, what the world is not smart at is finding the simplest way to call up a transaction. What I say, it's about how you can innovate a simple platform. So we use two-factor authentication, one-time passwords, as part of the security control, right? Then we have the encryption and decryption protocols. So it's about allowing a multi-layer protocol on your platform. Financial inclusion will come through an inclusive approach, not a single loop. So if they make a mistake and go for a single loop, it's going to bite them in time. At the end of the day, the concept of WhatsApp is not proprietary anymore. Today, anybody can come up with their chat platform. WeChat is not a WhatsApp platform. If they do that and you're not careful, what you find is you find markets adapting to their own channels. But I think that they're smart and I think they'll get it. Maybe these are sort of localized demonstrations they are doing. Everybody does demonstrations. But I think in time they will realize that it makes more sense to drive critical with players like ourselves who will just drive it in for you. The concept of Visa Direct, Visa builds the rails, they give it to us. We populate it in the world.
Now, why are you doing that? Because Visa, as far as it can, wants to preserve its original intermediation model, with being an interchange. You are an interchange to some extent, but less of an interchange than Visa is. And Visa is expensive on top of that. The universe that you're creating, Visa never had that universe because they were expensive. And here you are going out and collecting the mass market.
Well, look, it's an interesting point you made. Let me put it this way. In financial inclusion, you need an inclusive model. Rails will differ. People will prefer different rails for different reasons. What I think is happening and will ultimately happen is that you'll find that players like Visa would eventually acquire a wallet provider and play the wallet game with that provider, or they'll build their own wallets, which they've done through their virtual card system. For more I said, Visa would always be a partner.
What do they provide you? Because Visa as a model just does not have a wallet. In fact, every proposition that Visa creates is basically reimagining the physical card in the digital space, and that's it.
Yeah.
And it just can't imagine another universe, and it doesn't want to. In fact, the whole idea of Visa is to destroy the wallet model that you have, because yours is a very incremental,
very
sensitive ecosystem. Just one step outside the ecosystem, and your model doesn't work. So you're in a very sweet spot. Visa needs you. You don't.
Visa needing us is pretty clear, which is why they've opened up Visa Direct to us. Let me tell you the benefit about Visa Direct. Unfortunately, apart from our wallet system, which can take you to all wallets across the continent. Visa is the only player that can take you to all bank accounts via Visa Direct on the continent from a single source. So I see it more of a collaborative effort. I think they have a lot of respect for us. We definitely have a lot of respect for them. And we'll see how the partnerships will pan out. But as it stands today, we are the key player. If you want to grow the model, you come to us, we grow with you.
What about the other remittance players, everyone from Western Union to the new models of the old game, which is TransferWise, for example, who's trying to revolutionize, but at the end of the day, they're no different from MoneyGram and so on. Like in your original relationship with MoneyGram, what was the value that you were providing? And how do you view the remittance players, the ones that desperately need to revolutionize, and the new guys like TransferWise?
Okay, so what we do, which is beautiful, is that we give everybody digital distribution. So in the money transfer business, there are three players. There's what I call the traditional MTOs, without mentioning names. Then there are the middle players who have come in either by virtue of providing an app which is free, etc. Then we have the mom and pops, or what we call the corridor specialists. They are small players. It's a single family. They've been doing this for 30 years. Every month, people leave them checks, and then they do the cash and transfer on their behalf, etc. All of these guys are exposed to one thing: distribution. They need to fly into Africa and go and see every regulator and every single bank to be regulated and to push traffic through. Yet when they come on my platform, they have a single access point to a single API, which gives them multiple markets. I've done the regulatory work and I've built distribution for them. So all of a sudden, the mom and pop has the same leverage as the big player or the app player. And that's the magic we bring to the microsystem. So we make distribution efficiency for them. We make distribution very efficient for them and very easy. And these guys love it. So for us, the game is digital distribution, helping to build and expand an ecosystem that existed but nobody knew about.
But at the same time, you need to run faster because the wolves are running after you. Being that ubiquitous platform and the ease with which you created it, it can easily be created by other players. So how do you the barrier of entry high for your competitors?
One of the things we do is efficiency in service delivery. We're available 24 hours. Our wallets are agile and they're affordable, so consumers love it. We have a lot of retail promo. We spend back into the ecosystem. Every year, if we process $2 to $3 million in revenue, you can be sure that a good $1 million will be spent on the ecosystem. We give free airtime. We do things that make the consumer happy and comfortable. Because for us, we didn't come into this space to be rich. We came into this space to solve a problem. And in solving the problem, we become wealthy. We actually just finished putting up our corporate building, a state-of-the-art corporate building right in the heart of Accra, in cantonments. We're just not changing payments, we're changing our lifestyle. So we raised $350,000 years ago. We bootstrapped it. Today, everything is internally generated funds. We've grown. We're a classic model or a classic story of a local company that can grow in an enabling environment. And thanks to this the present administration of Ghana, your friend, the governor, they've put in very enabling policies that have allowed local companies like us to grow and thrive.
How sensitive are you to interest margins? Like if the interest rates start to decrease dramatically, in Africa, the interest margins are much wider. That in itself is a differentiator in why certain models work better in Africa than in markets where the interest margins have collapsed completely. So does that work in your favor?
Well, you see, any way the market goes will always work in our favor because we make a margin on top of price. So it's whatever the price is, we'll make a margin. Now, the beauty is that because we have a multi-layer product focus, we're able to survive because if what will hit one product on this side might not have another product on that side, and you complement it together to grow. And we've just scratched the surface in dollars. So there's so much to be done. We are the payment partner for MasterCard and the government of Ghana for the COVID-19 payments in Ghana. Absolutely phenomenal. It's exciting to see all these initiatives going through our platform. Every day there's a different initiative, there's a different conversation.
Yours is a model that originated in Ghana, which is arguably a middle-income country in Africa, and stable, and with the regulatory aspects. At the same time, you are meeting a need where the banks haven't gone into. So if Ghana was a little bit more developed, maybe the business model that you have may not have taken off because the banks would have met that. So would you say that you might be on your way to becoming a bank yourself?
Well, I think that one thing we will become is a financial services supermarket. Whether we'll be a fully capital adequacy bank or will be a sub-tier bank like a neobank, I don't know. But one thing I know is that we're going to be a financial services supermarket.
When we talk neobanks in Europe, the one thing they do well is they onboard very quickly. Doing 60,000 new customers a month, no problem. The thing they don't do very well is that the balance sheet doesn't look profitable because it's the onboarding aspect of it. And in the end, they find themselves competing with traditional banks.
I'll tell you why. Because they are only running on the Visa or MasterCard rails. They don't have a multiple layer socket, which will give them that agility. That's one. Secondly, when it comes to onboarding, it takes me tops 5 minutes to onboard a customer. In fact, we're the only platform that does self-onboarding. You don't even need to go to an agent. You can just onboard yourself. We've got a full compliance proprietary platform. We built ourselves right from scratch, which does everything. The reason why their balance sheets are weak is because they don't understand the balance sheet in the first place. In financial services, the money is made on the balance sheet and not on the P&L. So if you can onboard and it's not on the balance sheet, then you've not made money. If you can onboard and transact and it's not on the balance sheet, you've not made money. You need to be able to move liability and you need to be able to move assets. So if you bring in remittance or if you bring in payment, you need to be able to monetize the payment as it goes through your ecosystem. How do you monetize it? You monetize it by commission, you monetize it by wholesaling so that you make a margin on it. And then also don't forget that they're in a negative interest rate regime. These are markets where you can't make funded income. So they have to be innovative. We are licensed by FCA and we're just waiting for a few approvals. We've done an acquisition. Once our approvals come through, the next thing we're doing is going in there to set up an immigrant-focused bank that's focusing on immigrants and running a channel into the diaspora, through the diaspora, right through to Africa. And we'll teach them banking.
And you're funding it organically?
Well, I don't know if that will be funded organically, but right now we're waiting for regulatory approvals. But yes, the acquisition was funded organically. We've grown. Listen, we've had a phenomenal growth. We have an exciting balance sheet. The last I checked, our balance sheet has moved from last year, if I'm correct, about 11 million to about 33 million in balance sheet size. So it's a function of growth and we've got to keep growing. You can only keep walking.
How much of your motivation and inspiration is Chinese? The wallet platforms here are really super developed, although it's a very highly localized platform. How much of what you've achieved can I say is original, and how much of that is something that you've either copied or you open sourced it from what's out there? Everything
we've built so far is proprietary. I'm the designer, actually. I'm actually the designer in my company. So I design and other people build. What we're about to do is definitely layer it on, and we're looking at a few things. I'm also one firm believer in modular systems. I don't believe in hard coding everything. So I think that we've reached the point of scale. This is the point where we're going to do a lot of partnerships. This is the point where we're going to layer it on with a few modular platforms. One of the things I'm eyeing is WeChat. The concept of WeChat is pretty simple. but sometimes it's best to partner and just grow it faster. Now you asked what part of us is Chinese? I think everything about us is African. You made a point at the beginning of this call, which I like, is the fact that there's so much happening in our ecosystem and the world doesn't know about it. If you come into the Ghanaian ecosystem, you'll be amazed the amount of development, the wealth that is sitting here that is proprietary, hard thinking, a lot of hard coding, although I'm not a big fan of hard coding. What I think the disruptors will come to the gate. I think we're an invincible force of disruptors. We're moving and we move by the heartbeat. We're going to get precision intelligence onto our platforms. We're going to get artificial intelligence onto another layer. So we're going to make it a lot more agile. And we're not just going to be at the disruptive gate of the banks, but we're going to go into other markets, bigger markets. I think that the next layer of dominance will come from Africa and will be driven by the fintech ecosystem.
A lot of your evolution has been on the top of the mobile device. And what is your sense of how the platform industry will evolve and what game you want to play in it?
I want to put it. I think that there's going to be an explosion over the next 10 years based on when we launch into 5G. When that explosion happens, IoT might change the game. Because what it is today is you need to be able to do notification. So you need an active phone number. But maybe 5G and data and the likes of WhatsApp will bring a new realm. That OTT, the whole idea of over the top, will bring another realm where you can still be able to push in-app in WhatsApp messages, some form of messaging that enable you to transact, because the power or the force behind digital wallets is the fact that you can receive a message or a notification. But if IoT can be stronger, then IoT gives a lot of competition to the networks and it changes the game. And it's how enabling regulations would also help that transform our ecosystems. But one thing I can assure you about Africa is we leapfrog everything. So when we do 5G, I think things will change. When they change, will we be there? Yes. And that's why largely we're building our platforms towards OTT so that we're able to be a layer above the existing sockets.
Some people looking at what you're doing might say that your volume is still, by national size, I think is good, but by the kind of scale that you have in countries like China or some parts of the West, it's a proof of concept. Would you submit to that this is what you're doing is actually a proof of concept?
I would wish them well. And then I'll tell them to keep watching us. We grew our first year, we did 385 transactions. So yes. Even 2016, I can do 385 transactions and come to where I am today. Then it's only a function of time. Time is a semblance of many things. But one thing I know is that we're going for global dominance. One thing I know is that we'll control this market and possibly a good part of Africa.
Do you even bother with areas like blockchain, for example? Is that of interest?
Let me tell you, the blockchain, it's a hype. Open ledgers for document management, I think is a wonderful thing. But to say that you're going to use an underlying asset called crypto to change the world, it's a realm. It's a dark realm, and it won't take over the world. If anything will take over the world, it's a wallet. If a card could not dominate the world, what will dominate the world in the latter end of the 21st century will be wallets. Because we move with our phones. Today, with my phone, I never have cash. I just need, and in fact, the scary thing about Zeepay is I can even fund my wallet with a Visa card. So if I'm stuck somewhere, I just have to fund my wallet and I transact on any merchant ecosystem.
What happens if the Ghanaian central bank invest in a central bank digital currency? Would that wipe out your business?
I think it's a good idea, and I'm waiting for that because that will be the last push to interoperability. We need a digital currency which is not a mask nor a mirror. but the same as a currency in the market. So if you issue 200 million in circulation M1, maybe 10 million will be digital, and the remaining 190 will be cash, whatever form it is. What it means all of a sudden is that electronic money will come into the capital market. And so all of a sudden, if I have 20 million excess sitting in my wallet overnight, I can trade it, especially because I'm a licensed intermediation player. So I think it's a necessary thing. And if the governor is looking at it, I think it's a wonderful thing. The thing I can also assure you is that in the history of Ghana, this is probably the most innovative, forward-thinking, forward-looking governor regime we've got. We've got the best governance you can ever find. They are always 5 steps ahead of the game. Okay, it's scary when a regulator can think into the game. It's scary for a player because then they can control you, right? But at the same time, if you look at it on the flip side of it, they actually enable the market to grow. We have over $35 billion going through electronic wallets. We need to bring it into the capital markets. It's a critical conversation. And when it comes into the capital market, you also make it a level playing field. This is economics 101. So that's my view on it. It'll be good for business, not bad for business.
How has the pandemic changed things for you? And how has that influenced any of the thinking that you're going through and the decisions you're making for after the pandemic is over?
Sad to say, but the pandemic, I haven't seen it as a drawback. I've only seen it as an opportunity for growth. We've grown phenomenal. Our growth on top of traditional growth has been about 76% during this period, which is phenomenal. We've done the most acquisitions, the most strategic moves been able to do it in 2020. So it's really been a wonderful year. It's the lockdown effect and the post-lockdown and the re-lockdowns has only improved business, which is a shame though, right? But then what I've always told everybody is that the essential workers were never going to be hit, and they were the core when it comes to remittance. And that group of people have always mattered. We've just never seen them that way. And so they have grown my business, and I reward them every year.
Actually, just give us some big numbers again. How many customers do you have? What is the average transaction size? How many
we have
countries?
About 2 million users. Every transaction size is about between $128 to about $150. We're looking to close the year with about $500 million total process volume. Number of transactions, we probably close with about 2.8 million. 2020 was a year of sprint for us, and 2021 is sprint 2. And sprint 2 is just finishing what we started.
Are there any regulations that you're looking forward to in Ghana? If you were to influence regulation, what would you pay most attention to?
I would have asked every ministry, every municipal to have an open API. That's all we need for the uptake. Once they have open APIs with their bank account integrated onto these open APIs, then anybody can process any form of payment on their behalf. And then you open up the ecosystem and it becomes more efficient. At that point, you have efficiency.
The questions I've had to ask you, these are questions that I've been asking all around the world. And to be able to get the answers that I got from you in Ghana, it just thrills me and helps me put in perspective my own understanding of how payments is evolving, how financial services is shaping up, and where the disruption will come from. And it's very interesting that you are creating that disruption in your market. Thank you very much. And as I said, this is a continuing conversation.